I'm very pleased to welcome everyone to today's session of the speaker program of the U.S. Asia Law Institute at NYU Law School. We're very excited to welcome Professor Wei Cui to today's session. He's going to present his recently published book, The Administrative Foundations of the Chinese Fiscal State. Before we let Wei introduce his book with some comments, I wanted to briefly introduce myself. So I'm Mitchell Kane. I'm professor of law at NYU School of Law. I focus on tax. I have limited knowledge of Chinese law. What I know from Wei. So I'm very excited to have this opportunity to share this panel with him. I also wanted to mention two upcoming events that you'll want to have marked in your calendar for the Institute. So first off, on March 2nd, there will be a presentation by Professor Rowena He of the Chinese University of Hong Kong. This is entitled Hidden Transcripts, Reflections from a Hong Kong Campus. So this presentation will call on narrative accounts based on Professor He's interactions with students regarding the massive protests that took place in 2019. Please note, this is a strictly in-person event, so no Zoom or recording or live streaming. And this is going to be 12:30 to 2 o'clock, as I said, March 2nd, and that's in Vanderbilt Hall, room 201. We have a second upcoming event, March 7th. This is entitled Collective Bargaining in Japan and the United States. The speakers are Professor Hiroya Nakabuto from Hitotsubashi University Graduate School of Law in Tokyo, and Professor Alan Hyde at the Rutgers Law School. This will be an in-person event from 1:15 to 2:15 in Furman Hall 910, and this one will have a Zoom link. For anyone who wants to check in on the details, time, location, substance, speakers for those events, or register for them, you can find all of the relevant information on the Institute's website. So let me just take a minute briefly to introduce Professor Cui and this topic, and then I'll turn the stage over to Wei in order to make a presentation. So first off, I should give Professor Cui's credentials. So Professor Cui is professor of law at the Peter A. Allard School of Law in the University of British Columbia. And he was most recently, to our benefit, a visiting professor of law fall 2022 at NYU. Professor Cui is a world-renowned expert in both tax law and Chinese law, making him one of the few people in the world, I think, who could write the treatment that he has on this, to me, impenetrable topic of the role of law, tax law specifically in China, taking on issues of what exactly are the legal norms, what is happening on the ground, how do we understand compliance, and many other issues that he's going to talk about. So I'm going to say I think there's no argument, no similar or comparable work out there that if you were, at least as an English speaker, wanting to understand the role of tax law in China as compared to Professor Cui's book. So it, in the first chapters, includes an indescribably rich description of the Chinese tax bureaucracy, which I enjoyed just reading for its pure, raw, descriptive detail. It's just sort of unbelievable work that Wei has done to follow what is happening on the ground and shares this with us. In addition to the descriptive work, Wei is really working on a normative project as well. And so part of the book is to question and show how some of our standard theories of tax compliance in the West and in the United States are rather poor descriptors of what we observe in China in terms of tax compliance. And then the bang at the end of the book is a extremely provocative theory offered by Professor Cui to help us understand tax compliance in China, and it brings together issues of law, taxation, revenue collection, administration, and distributive justice. So I think that's enough to keep us well busy for the next 90 minutes. I'll just say one other thing. which is I'm certain after Professor Shui's presentation, many on this webinar will be encouraged to acquire his book and read it. I want to offer my own endorsement that you do so. It's a really wonderful piece of work, and I hope we're able to introduce it to you, have a lively discussion. So we'll have Professor Shui present, and then we're going to open it up for Q&A after that. So Wei, why don't you take it away with your presentation?
That's great. Thank you so much, Mitchell, for that introduction. And I want to thank all colleagues at NYU for organizing this event. So thank you again. I've been writing about Chinese taxation since 2006. And from the start, I faced two professional challenges. These are ordinary professional challenges. One is to get tax specialists outside China, scholars like Professor Kane, to get interested in Chinese taxation. And then obviously the other challenge is to get people interested in China, like many members of the audience today, to be interested in Chinese taxation. And I must say that I've come to realize that the second challenge is the much more difficult one. And I'm still trying to identify the best explanation of why that is. I think the challenge is twofold. One is to get people to recognize that taxation in general is just extremely important. The second thing is to get people to recognize that that taxation is complicated and requires specialized knowledge. You can't just say anything you want about taxation. So I can, in some sense, you can almost say that there's this thing called tax literacy. So if a community is tax literate, you don't need to have people to be knowledgeable about tax rules. You just need to have people generally know that there are certain circumstances where taxation is likely to be important. And you know that to analyze the important issues, people have to engage in careful reasoning. So in that sense, I was lucky to be trained in the US. The level of tax literacy, I would say, is very high among the general scholarly community, not just within the tax community. I think the level of tax literacy is probably a little lower in China itself and also in the study of China. So because of the second challenge, I really welcome this opportunity to talk about my book and Chinese taxation. So I'm going to talk about three things in my presentation. I'm going to explain what is the main story of the book. I'm going to talk about its implications for the study of Chinese law. And then I'll explain why, from my perspective, everyone interested in China should learn more about Chinese taxation. Okay, so let's start with this question. How do the advanced economies in the world collect tax? You will see on this page in the slide to the right, a chart that shows you that generally when in the world, the richer a country is, the more likely it is that it will collect a lot of taxes. And so this different colors represent countries from different income groups. And you can see in the high income group, there's a cluster of countries that collect between 30 and 50% of their GDP in taxes. So this is a pattern that's visible to all countries in the world. And so how do the rich countries in the world collect taxes? The answer in some ways is simple. The basic idea is self-assessment. And what is self-assessment? It means that taxpayers find out what the rules of tax law are. They file tax returns to provide information required by law, and they make tax payments in amounts required by law. Okay, so many of you would say, oh, this sounds very familiar. We all file annual individual income tax returns in the US and in Canada. The reality is slightly more subtle. Most of the assessment, self-assessment done in rich countries in tax collection is done by businesses, not by individuals. And so businesses as employers will withhold most of the personal income tax on wages. They will withhold and pay payroll taxes. They will collect sales and value-added taxes, and they pay corporate income taxes. They do all of this according to the requirements of law. They do this just like individuals file tax returns and make payments. They find out what the law is, and they report their income, and they make payments. The practice of self-assessment, if you look at what taxes are collected, it's pretty self-evident that this is the foundation of modern tax collection. On top of this practice of self-assessment by businesses, individuals also carry out a self-assessment, although they do so more in some countries like the US and Canada than others. And then finally, the government enforces tax law in all these countries. The main way of enforcement is by auditing tax returns, checking whether taxpayers truthfully report their activities. But the audit rates and penalty rates for government enforcement are generally pretty low, so that if you're determined to be a tax cheat, it's financially worth your while to be a tax cheat. So all this seems pretty ordinary. What's interesting to think about how a country introduces this kind of system when it doesn't have one. This is what China had to do in the 1980s. In the 1980s, China did not have self-assessment. It did begin to build a large army of tax collectors. This is what this chart to the right shows you, the buildup of the tax collection workforce. But many of these tax collectors in the 1980s were stationed as state-owned enterprises. And there they handle tax payments and tax calculation for the businesses themselves. The taxpayers did not self-assess according to a uniform set of rules. And this is pretty straightforward. Tax liabilities back then in China for SOEs were often determined on an individual basis and subject to bargaining, because SOEs paying taxes were still a lot like SOEs remitting profits to their owners. And so, how much dividend should we be paying? How much profit should we be remitting? That was always a process of bargaining. Different levels of government also offered their tax policies. So there's a wide range of different levels of tax collection, and tax collectors implemented these diverse policies. Broadly, there's no self-assessment. In 1993, a major tax reform was carried out in China. New taxes were introduced, and the central government wanted to implement a unified set of rules across the country. So at this point, the government decided that tax collection was going to be based on self-assessment. Okay, consequently, there was a major tax administration reform launched in 1997 to support this national transformation. And so what that involves is centralizing taxpayer services. So if you go to China, you see a lot of taxpayer service halls in major cities. These are giant buildings. These were the products of the 1997 tax administration reform. And they substituted for a system where the tax services were all provided in person by having tax collectors going to the businesses. So besides taxpayer services, the government in this 1997 reform emphasized audits. People started auditing taxpayers for the first time. Before that, there was no auditing because there were no tax returns to look at. There was beginning computerization, building databases for taxpayer information, gathering taxpayer information, and even promotion of tax litigation. So if you're interested as a lawyer, so that was the beginning of tax litigation in China. By 2005, the effort to promote self-assessment that I just described has largely stalled. Tax agencies began to revert to 1980s style tax collection. Tax collectors started providing a lot of in-person taxpayer services again. Bargaining substantially resumed. Audits dwindled, and taxpayer information gathering was not going anywhere. Okay, so how come? This is basically the story of the book. This is the main story of the book. What happened? Why did China decide to introduce self-assessment and then decide to abandon it? So that's what the book is about. The short answer is the Chinese government came to think that the old way they did things worked pretty well. And so they didn't need all this self-assessment stuff. What does that mean? So I'm going to explain to you what that means. But let me pause now to say something about how I wrote the book, because a number of initial readers of the book, including Mitchell, mentioned that the book has a lot of detail And I wanted to say as an author that from my perspective, I didn't think that I was doing this thick description, acting like an ethnographer, trying to capture sort of the entire world. I thought I was providing a very skeletal description of a Chinese tax administration. And I was trying to put just enough to support the arguments I make. So the problem is the argument I wanted to make probably was very convoluted, and people did not, it's natural to think that readers did not come with this convoluted theoretical framework that I wanted to support. And so what I'm going to do now is to try to set the conceptual expectations and talk about why the story, in my mind, mattered from a conceptual perspective. Okay. So what is at stake is the following. I'm interested in certain theories of legal norms, according to which legal norms, the rule of law, what we call the rule of law, has what's called micro foundations. So I'm going to draw on two scholars, Gillian Hatfield and Barry Weingast. They wrote an article in 2014, and their theory of legal norms is in turn drawing on well-known legal philosophers like H.L.A. Hart and Longfellow and so on. So you don't need to know this theory independently. I'm going to explain it. It's pretty intuitive. To understand the theory, we ask the question, what is law? Okay, and so philosophers have talked about this for a long time. And the following will sound familiar to people who have thought about this philosophical question. The theory that seems convincing to me says that what is law? Law is a clearly announced set of rules, and these rules represent so-called norms. And norms means that people in a community for which this law is relevant have emotional feelings about these norms, and non-compliance would draw disapprobation from others. Okay, and so people are inclined to disapprove of violations of these norms and in other ways enforce these norms. Importantly, Hatfield and Weingast found out that it's important for there to be legal ordering that subjects in the community find it rational to follow and enforce norms aside from penalties from officials. And so officials, government employees are not the only people enforcing legal norms. Everyone else is also enforcing legal norms. And that's important because the reliance on private enforcement will explain the most prominent features of the concept of law. And so philosophers like Longfellow have long pointed out that we think that anything called a legal norm has to display certain features. Legal rules, for example, has to be common knowledge. Everyone needs to know what the rules are or are able to find out. The rules need to play a level of generality. They need to apply to everyone. Rules don't apply just to one individual. They apply generally. There's public promulgation, and so you know where to look for rules. Rules have to be clear, they have to be non-contradictory, and so on. What Hatfield and Weingast argued is that the reason why legal norms need to have these features is probably that they are all necessary features to induce private enforcement. Conversely, if you had pure public enforcement of legal norms, you actually don't need to have any of these features. If the officials knows what to do, and no one else need to know what to do, a subject can comply just by asking the official, what do I need to do? And the official will say, this is what you do, and if you don't do it, we will have a penalty for you. And that's enough to achieve outcomes. By contrast, we think of legal norms as having all these features such as common knowledge, displaying generality, public promulgation, and so on. And they think that it's quite plausible to think that this is because private enforcement is central to the rule of law. So I was very persuaded by this theory, and I would argue that the practice I mentioned at the beginning of lecture, self-assessment by businesses in modern tax collection, illustrates this idea of rule of law really well. Okay, and so they illustrate this idea the rule of law has micro foundations, meaning that people have private incentives to enforce legal norms. So tax law is announced by the government. People are supposed to learn it. If you don't know the tax law, you have to learn from others like a tax professional or from government publications. And then, as I mentioned at the beginning, businesses learn this and they do this for the most part without public official intervention. Right. So the opposite of this is a system where what people are supposed to do is largely enforced by officials. Okay, and so you substitute public enforcement for private enforcement of legal norms. Okay, and according to this theory, if you do that too much, if most of the rules are publicly enforced by officials, the rules themselves no longer need to be there. They don't need to be announced. They don't need to be common knowledge. They don't need to possess generality. Okay, and when the rules lose their relevance, the incentives for private enforcement may also go away, may be eroded. And so people come to rely on public enforcement for this sphere of activity. And what we're talking about here is tax collection. So what I say in the book is this is pretty much what what happened in China when the promotion of self-assessment stalled. So in different chapters, I explained how public enforcement took priority in different spheres of compliance. For example, in chapter 3, I talk about how governments routinely intervene to make taxpayers file tax returns and make payments on time. And so the timely tax return filing rate in China was very high, above the 90s nationally, starting in the year 2000. And that was because all of the government officials, if taxpayers haven't filed returns by the a few days before the deadline, they get very anxious. They go to taxpayers and make sure that they submit returns, and sometimes officials who wouldn't even submit the returns for the taxpayers themselves. Same thing for timely payment would tell you, this is the amount you have to pay, and if you can't pay this much, we negotiate a different amount and you pay that amount, and therefore timely payment, the ratio of timely payment is also very high. Consequently, that was the time when audits stopped really functioning. There's no fostering of norms of truthful reporting. So what taxpayers say on their tax returns is of secondary importance. It's more important that you file the returns, pay some tax, and there's discussion about how much tax you have to pay, but what's disclosed on the tax return is of secondary importance. Tax liability came to be determined extensively by government interventions. And what's interesting here is government interventions can take different forms. Sometimes it's in-person negotiations, but under the Chinese VAT, it's mechanical determinations such as encrypted invoices. So taxpayers can't just say, I know what my sales and purchases are. I'm going to report these things on my tax return and determine liability. The government says, we don't want you to do that. We want to have you to employ these, computer chips where we can monitor you on how much sale or purchase you made, and only those sales and purchases that are recorded on these chips count for your determining your VAT liability. So you can see that as a form of government intervention where the chips are acting as agents for the government. So all these things I say in the book eroded incentives for private enforcement. Public enforcement is the main reason why people comply with the law. Okay. So I'd be happy to talk more about how exactly this works. This is a very strange system in a way, and it's I think I try to get across how it works. Also, at the same time, trying to get myself to understand how it works, given how alien it is relative to Western systems. So why did the Chinese government decide to do this? Why did do it this way? The book offers mainly three explanations. The first one is that this method did raise revenue, okay? And so let me go back to a few slides. So you see when China decided to abandon the promotion of self-assessment after 2005, between 1997 and 2005, it wasn't like self-assessment was a disaster. No, revenue was rapidly growing, okay? The revenue continued to grow. And so both of these methods, whether you have self-assessment or not self-assessment, both of them can generate revenue, okay? And so is it puzzling why this method of tax collection can generate revenue? I think it's an interesting question. If you were a scholar based in the United States or Canada and just read economic scholarship on tax administration, actually the mainstream of compliance theories and theories of tax administration focuses on public enforcement. Most economists are interested in how to improve the effectiveness of public enforcement in tax collection, and very few people write about self-assessment, okay? And so there's some kind, all kinds of empirical evidence that suggests marginally public enforcement is going to make a difference. And all those theories support the conclusion that this kind of undertaking is going to increase revenue. And that's what happened in China. Secondly, the focus on ex-ante interventions, instead of waiting for taxpayers to self-assess and waiting to assess whether they truthfully reported, you intervene beforehand. You make it difficult for taxpayers not to do something, not to file tax return, not to make tax payments. Those are things I call ex-ante interventions. I explained in chapter 5 that those interventions made political sense because it generated feasible performance metrics for low-level civil servants. At the same time, because low-level civil servants are handling so many different tasks, besides taxpayer services and audits, it really deal with other things as well. And so because there's a wide range of tasks, the tax collectors had quite a bit of discretion over what's to focus on. And that generates a certain kind of revenue elasticity. And so they have judgments about how to increase revenue. If they're asked to increase revenue marginally, they have choices about how to do that. And finally, overall, the drive to create cohesion within the state apparatus, that's a matter of incentivizing your low-level civil servants while establishing performance metrics for higher-level civil servants. All of that created a kind of cohesion within the state. And that's that kind of need to achieve cohesion within the bureaucracy shaped the strategy for revenue collection. And so in chapter 5, the title of chapter 5 is called Organizing Revenue, which is, if you think about it, a very strange term to think about, getting revenue from the economy. Organizing revenue literally means we need money. How do we organize its coming to the state? Okay, everyone's interested in organizing revenue. And then finally, this approach of emphasizing ex-ante intervention is actually complementary to technology. So with more methods of surveilling taxpayers, you can get a lot of taxpayer information, and you don't have to wait for them to tell you the truth. I think I'm coming to the last 3 slides of my presentation. I'm going to answer the question, why should we care that China decided to collect tax this way, has been collecting tax this way? Okay, so I list 2 sets of reasons. The first set of reasons really matters for people who care about taxation. And so there are lots of economists, legal scholars who think really carefully and for a long time about how countries can be enabled to collect tax. That's a big problem for developing countries, for example. As I showed you on the first slide, developing countries have difficulty building the capacity to raise revenue. And so the reason we should care about how China did it is that tax system and advanced economy are generally based on self-assessment and what I call having a micro foundation for the rule of law. To know that a major tax system can function without such foundations is itself social scientifically informative. Okay, and so that's the scholarly pitch for interest in this story. In fact, I argue in the book, if you look at economist theories about how to secure tax compliance, those theories that Western economists develop thinking that they're applying, their theories about Western tax collection actually better fit China than they fit our practice. The reason is that most of these theories de-emphasize self-assessment and really give a lot of emphasis to public enforcement. And that's exactly what China does. To put it differently, both economists and Chinese tax administrators have been very interested in finding substitutes for self-assessment, which I say are substitutes for the micro foundations of the rule of law. And so that's the first reason why I think this is a useful story. Now, for people interested in China, I want to propose that, let's think about the possibility that this is how things are actually done in other major spheres of Chinese governance too. Consider the relevance of these two things that I contrasted. One is adherence to publicly announced rules and reliance on private enforcement, private citizens knowing what the rules are and enforcing those rules against each other, relative to government interventions with a lot of discretion. So you don't want to know what the rules are, but there are authorities to tell you what the rules are and enforce them directly. So let's ask which of these two modes dominate in the biggest spheres of Chinese governance. So, what are the big spheres of Chinese governance? I would say, policing. Policing comes first. Taxation probably comes second. Family planning has a bureaucracy of 400,000 people. Environmental protection, public education, public health, emergency response. So these are some of the areas of governance. So, as a person, not as a scholar specializing in these fields, but as a person observing Chinese governments, I think it's not implausible that all these other spheres give great emphasis to the second mode of governance. And that means that the foundations for the rule of law is eroded in all these spheres. This, of course, has direct implications for the study of rule of law in China. So scholars like Catherine have been thinking about this for a long time. So my conclusion for the study of Chinese law is pretty pessimistic. The superstructures of law, legislatures, and courts will not work very well when law lacks micro foundations. That's actually a major conclusion of Hatfield and Wangas theory. In chapter 7 of the book, I also described that there is a well-resourced legal system in China. Courts are well-funded, legislatures are well-funded. There's simply very little use in Chinese taxation. Law is important mainly in political rhetoric. It has very little practical relevance, right? And this is not surprising because the government has found a different mechanism altogether that substitutes for enforcing legal norms. And this means, if I want to formulate this in the most provocative way, it's provocative for people studying Chinese law. Scholars of Chinese law have been debating whether China has rule by law or rule of law. A lot of scholars claim that China is interested in developing rule by law, but not adopting rule of law. So my study, the book, proposes that this is wrong. Chinese governance in taxation and probably in many other spheres does not rely on rule by law. And therefore, the conversation about rule of law has no basis whatsoever. And so there's a systematic substitution for legal mechanisms. Final slide. What does that mean? So I want to say that this means we should be talking more about Chinese taxation if you're interested in China. Why is that? There are many reasons to think that taxation is actually among the most important pillars of modern governance. So here is a quote from Adam Smith from 755, who said, "Little else is required to carry a state to the highest degree of opulence from the lowest barbarism, but peace, easy taxes, and a tolerable administration of justice, all the rest being brought about by the natural course of things." And so social scientists have thought about this range of issues a lot, and they have come to think that law is important, but taxation is a parallel system that really explains economic prosperity. And so it's just a self-standing, it's a standalone important pillar of modern state's legitimacy. The reason to think that regime legitimacy may not depend on the rule of law. I'm pretty convinced that most Chinese taxpayers are okay without the rule of law. Right? They complain from time to time, but for the most part, they're okay. So if regime legitimacy does not depend on the rule of law, what does it depend on? I do think that it still depends on the strength of social safety nets, about effective redistribution, and government spending to sustain economic prosperity. And so these things remain important for China. There's no substitutes for these policy objectives. And on these matters, China and the West, Western democracies still share a common language. And so this is one important reason for all of you to think more about taxation. Okay, that's the end of my presentation. Thank you.
Thanks, Wei. That was a very, very good summary, I think, of what the book is doing. It opens up many questions. So I'll launch off with a few, and please, to our guests, put your questions into the questions function in the webinar, and I will pass them on to Professor Cui. So, Wei, I want to start off, we've been discussing this, I guess, for like a year, and especially in the last few days, and every time I hear you present it or I think about it, I come up, I think, with new questions or thoughts. So I'm going to ask you something that occurred to me during your presentation. I may have touched on this in the past, but I can't recall. But the question is, if you could say more about the internal perspective, if we can use that word, of the public officials administering the Chinese tax system. And so we could draw some distinctions, maybe sketch a spectrum, some that look more law-like and some that look less law-like. So we could have a kind of almost tax farming model where the order from up on high to tax administrators is, we authorize you, we give you the coercive powers of the state to collect as much revenue as you can, and you get to keep 5%, and you pass 95% up the chain. And we'd say there's no law there. No one thinks that's law. There's nothing for those officials to look to constrain themselves, to think of themselves as legal actors implementing any type of rule-based system. A second approach, not much better in my view, would be, okay, tax collecting officials, each of you needs to collect and then fill in the blank for a certain amount of revenue. So not as much as you can, but you each have to collect X dollars if we're in a dollars-based economy, and you can keep 5%. I take it that's not what's happening in China. There is an articulation of some kind of rule-based system. So I would imagine if you asked the parties that are doing the public enforcement in the absence of self-assessment, how do you envision your role? It's neither of those two things. There is some source of rules, and these form the basis of what a person should pay in tax. And then they're not going to do it in a voluntary self-assessed way. We're going to give a return, they give a number, and then we come up with some final number. But it doesn't seem, I think, and I want you to elaborate on this, completely separated from that official looking at something that looks rule-like. And that makes me wonder, is there more law, more rule of law in the story than one might assume just by looking at, okay, absence of self-assessment, erosion of the micro foundations of the rule of law? You put it another way, it's almost like your story seems like a very homogeneous state actor that is the public enforcement and collection of the tax law. But in truth, as you show with all of your great descriptive detail, we have many and levels of tax bureaucrats that themselves seem like regulated actors, seem to me to be functioning, if I'm getting the story right, in the presence of some kind of law. So did we maybe just bump the rule-like, law-like aspect of it up a level? And we are seeing law-like norms regulating the collectors, or is that not the right way to put it? Is that not descriptively accurate?
Okay, great, Mitchell. That's a great question. Let me start by saying that I think describing how Chinese tax collection works is in some ways, it's a difficult task. And so what I try to do in writing this book and also doing the research before writing the book is to the extent possible, read internal documents, find internal data, and try to distill a coherent interpretation of the internal documents and the data that I can see. Okay. And so what I don't want to do is to base my description on anecdotal accounts. I've talked to this person tells me this is how it works. And so, if you talk to taxpayers in China and say, what do tax officials do? They would say a bunch of really nasty things. And so I think that's not an adequate account. And so constructing the internal perspective is pretty important. So in answer your question, when do rules matter? When do rules not matter? I think one has to answer in a couple of steps. One is revenue targets are overwhelmingly important. Okay, revenue targets are set basically completely independently of what the rules are. Okay, and so once you incorporate that, okay, this is not going to be a very rule-based system. The economy goes up and down. How could it be that you just specify that your revenue grows at a 5% rate? And maybe, your revenue sometimes should be growing at a 15% rate, but at best, we can't let it drop below 6. None of those things are based on projections, applying rules, gathering taxpayer data. And so that fact itself is, everyone will admit that tax revenue targets are extremely important, that it's what drive them. Okay, and so there's no denying that something else other than law is guiding the most important efforts. Okay, and so the second point I would say is that we do have fairly good evidence from internal documents that non-legal considerations drive a lot of the marginal tax collection, in the sense that, say, we are trying to meet revenue targets this season, we haven't collected enough. What's going to happen next? And so what I say in the book is, you get something like tax farming. And so the finance department of a county will say that we're this much short of target, try to collect that, and whatever you collect, you get to keep 5%. That's not kept by individuals, it's kept by tax agencies. And so, it's still a organizational kind of pecuniary reward. And so you can see that from internal documents. It's not just taxpayers bad-mouthing tax collectors. So I think whatever is done by the rule of law. So I think taxpayers, large businesses, they're likely to have incentives to figure out what they're supposed to do, what sets their expectations of tax collection. They can't be completely what the local tax collector tell them. And so those businesses probably do some kind of compliance, although you'd be surprised how little very large businesses know about the actual tax rules. And that's my experience. So I offer anecdotal examples in the book from my own experience working for different government units or state-owned enterprises and so on, that observation. So the variance in the type of approach to compliance within firms is pretty great, but I would say that some of them, let's say foreign businesses, they sort of want to know how much tax they have to pay, and that sort of depends on rules. So all of those things generate revenue. I would say that they are inframarginal. Whereas the marginal tax collection, we should be increasing tax collection during this period. Mm-hmm. That is heavily driven by tax administrator efforts and tax farming like mechanism. So that's the start for an answer.
So that's a really interesting answer, which makes me reflect on the US system. And I think we observe all the time revenue targets, not in the IRS or the federal tax system, but in law enforcement generally, we see revenue targets and we don't think it's operating outside of the rule of law. So the classic examples would be speeding tickets, where at least we are to understand there are quotas, and officers will ramp up enforcement towards the end of the month if it's a monthly quota. Parking violations, although in New York City, the administrators are quite good consistently enforcing parking rules. But the idea that there's a revenue quota for an enforcement agent is also entirely consistent with strong legal norms plus some prosecutorial discretion. And that's why I wonder about the inframarginal point. It's like, the law sets an upper bound of what you can do. People who are expending more effort to issue speeding tickets or parking tickets on February 28th than they were on February 1st, certainly as an internal perspective matter, don't view themselves as not applying the law. They're just working a little harder. And if they were to issue every possible speeding ticket that they could and realize that, oh, I haven't hit my revenue target, like no one thinks, oh, the stated posted limit is 65 miles per hour, but I'm just going to drop it to 58 for February 28th because we need to squeeze a little more revenue out of the drivers. And so how do we know that's not the story in China as well? Since you say there is this inframarginal aspect. So for example, the foreign taxpayers are looking to a set of rules, going to advisors, trying to comply with them. How would we distinguish the case where rule-like, law-like elements are setting like an upper bound and what we're viewing as prosecutorial discretion all under that bound, or it's like on the margin, there is no rule-based upper bound, it's just about getting more revenue? And maybe this is hard to, I mean, I have a strong sense clearly that it's the latter, but I'm wondering how we could tell the difference or be confident in that assessment.
Yeah. So I want to try to answer that. I'm not sure whether what's at stake will be entirely clear to the audience. I think, first of all, I think selective enforcement, if it's systematic, is regarded as a problem, even in the US. Okay, so we hope that most of our law enforcement doesn't look like issuing speeding tickets. We know that's one area where you just take it as a given that you can drive, 10 miles above the speeding limit. So I'm not sure whether that's a very good example of how law is generally enforced. I also want to urge that we shouldn't assume that the law is the upper bound. And so it's not the case that Chinese tax law says just collect a lot of taxes and then people just evade to the extent they can. And then tax administrators has the choice of enforcing or not. I think that's a myth. If you look at Chinese tax law, as we do as tax lawyers, the tax is not set very high. Okay. And so variations, whether government officials are collecting too much taxes, too little taxes, that really varies according to tax type, taxpayer, and so on. And so the slack is not bounded by what the law says. At least those are preliminary answers. I want to say that, yes, there is an extent of discretion, but the amount of discretion in China is great. And also, you don't know where the law is going to come out because in the ordinary compliance process, most of the negotiations and payments may depend on not knowing the law, not having incentives to learn the law. And so I explain in the book, it's much cheaper for you to find out what you're expected to pay from your local tax collector than to study the tax law and find out what is the liability going to be.
Okay, so that's a really nice segue to the first question we have in the Q&A from John Stevens. So John says, from the sound of it, would a taxpayer file a return as an opening offer in case an official might assess a higher amount, especially if there is less concern over getting caught underreporting? So I take that question to be So there are two parts in there. So to what extent are the taxpayers acting strategically? So they're going to, understanding it's a negotiation and a back and forth, do they act the way rational people act in negotiations and put out a lowball first offer? Or second, is it kind of implicit in what you just said? It's almost like you get some guidance before you make an official offer of what you owe. So John's question is almost maybe more grounded in a mentality of self-assessment, which we as U.S. tax lawyers just can't break ourselves away from.
Yeah.
So I guess maybe we just collapse it to this: who makes the first offer?
Yeah.
Who goes to go first?
Yeah, that's a great question. And this is the kind of question that tends to come up from Western scholars. And so my chapter 2 of my book is about the practice of self-inspection, self-auditing. And if anyone reads that, their response is that, how could this work? And so basically, the government says, in these companies, you guys are going to be audited, but we will let you self-audit first and tell us whether you owe the taxes. And then the taxpayer basically, has a week to tell the government, I think we owe this much taxes, and they file a one-page report. We owe this much VAT, this much corporate income tax. So it's nothing like an amended return. It's not like actually checking what happened on my tax return. No, this is just, we think we could be paying this much more. So that seems like negotiation. The government's getting no more information. Mm-hmm. So if this is done repeatedly, isn't the taxpayer going to act strategically? So my answer, I didn't get to write about this in the book, but my thing in the overall pictures of things is when this happens, lots of rounds of negotiations had already happened between the taxpayer and revenue managers. So when the tax inspectors come in, they're pretty late to the game. And expectations about how much tax to pay are set through repeated interactions, through prior communication. And so taxpayers probably don't get to make the first offer.
Okay, interesting. So I wanted to ask you a follow-up question on Wine, Gas, and Hadfield and the argument about micro foundations. Mm-hmm. And I think one thing I really love about the book is it forces us to think carefully about certain labels that we tend to value or valorize even in the West. So rule of law tends to be, at least in American law schools, this is not something we have to debate, good or bad. We're pretty on board with virtues of rule of law, and we then might have debates about what it means. But you kind of force us past that label. In part, the micro foundations point us back to Fuller and what are the constituent parts of law, which we could independently tell stories about why we value them. You, on your last slide, encourage us to ask a more consequentialist story, not like in a utilitarian sense, but just like, what are we after with the tax system? Are we after redistribution? Okay, let's ask the question, did this system do a good job of it? And we don't have to say, is it law? Is it rule of law? Does it have this micro foundation? We can just say, okay, here's a pre-tax distribution of income. We can use some measure of inequality. Here's a post-tax distribution of income, do some measure of inequality. Look at that. We're more egalitarian than other states that jump up and down about their progressive welfare states and safety nets and the like. So I like all of that. But it also, I'm pretty grounded in the Western approach, pretty used to valorizing rule of law. And it makes me wonder whether the micro foundations are all created equal. And I had sent this to you in an earlier comment. I thought maybe we could explore it a little more. And so the one that I really still keep getting stuck on is generality and generalizable of applicability. And one thing I might share here is I don't know if you know Luis Calderon Gomez, who was our a visiting assistant professor at NYU last year. So he wrote this fascinating article basically arguing that US tax law fails the criteria of a Fullerian conception of law. It's not understandable. It's contradictory. Like, go down the list. He's like, US law isn't even law. And I think most people wouldn't find, like, if you took it out of context and said, I'm not trying to argue that US tax law isn't law, but if you just said to most Americans, is this understandable? Is this comprehensible? Is it non-contradictory? Like, it was like, check, check, check. It like lacks the features of law. Generalizability, I put in a different category. And sure, okay, you can tell a story about lobbyists and maybe like the pass-through deduction, treats different labor differently, but people get really worked up if there's a perception that someone got a deal and someone else didn't get a deal from the IRS. And even though it's like a little dark secret that the IRS, the way the IRS audits, okay, here are 12 items, right, and a notice of adjustment, and they bargain, right? And when you tell people, oh, really? Like, how can the IRS bargain? Like, you have to comply with the law, right? And this worries people that there's bargaining in that way for those who haven't gone through the administrative process of US tax law. And so I think if you told your story to most Westerners, they might say, okay, good, okay, fine, good, redistribution, you're succeeding, safety net, fine. But people would really bog down on this idea of, well, what is the constraint on the administrator treating people in a like way? Like, if it's, it's not, so to put it another way, it's not some of the, I get, like, the micro foundations serve their means to an end of the superstructures of law. And if you have a different way of approaching something, you don't need the micro foundation. Fine. I want to say the micro foundation of generalizability has independent normative merit. To me, it's part of what legitimates a system. And that goes well beyond, for me, private enforcement. I think like any system that is based on collective financing of collective needs, if you go into it with no mechanism to treat likes alike, to generalizable applicability, I feel like that is a less legitimate, less good, less just system. But you seem, I mean, I think you're not there.
Yeah.
Well, no, that's a micro foundation, and we don't need the superstructures of law, and we should just go right to the things we actually care about. I like to really care in its own right about generalizability.
Okay, great, Mitchell. These questions involve important things. Let me speak to two issues. Before talking about the notion of generality, do I think that legal norms only have instrumental value? And so I would say that, as a person who, spent most of his career in, North America, I'm very comfortable with the rule of law system. It's the system that I prefer. But I have, Chinese colleagues who I can tell that they live in a system without the rule of law, and they seem to be completely comfortable with it, and they don't want to be exposed to a different system. It's not just a matter of preference. The rule of law is a wonderful technology. And so if you look at the United States, many of you know the IRS has thin staff. It has terrible technology, right? And technology from the 1950s, and no one ever wants to update that. And China has a good amount of staffing in the tax administration. It has pretty good computers, okay? And that's a lot of investment just in the last 20 years. And so in a way, you say, what enables us to collect so much tax when, like, the system should really be dysfunctional, right? You can't reach the IRS. Their, programs are terrible. Their database is terrible. And I think the answer is that the rule of law, and, people are doing all the heavy lifting in the tax system. That's not a public enforcement agency. And so in addition, with the rule of law, you can do a lot of things. What you write down on paper actually matters, right? And so we did a study in China about, accelerated depreciation, a policy that's, implemented. Did it change taxpayers' behavior? And so this is an article in the Journal of Public Economics. And the answer is that it didn't really do it. Probably because most taxpayers never bother to find out what the rules are. And our evidence for that is that, if you're closer to a tax bureau and that tax bureau has a higher ratio of administrators to taxpayer, you're more likely to claim accelerated depreciation. Mm-hmm. A different paper about the same tax policy published by, two other authors, they said, well, if taxpayers are evading taxes all this time, they're not going to care about accelerated depreciation, right? And so if your tax liability is not determined by the law, accelerated depreciation is not going to matter. That's another complementary explanation. All those point to what China is missing when it doesn't use the rule of law mechanism. As to whether the perception that tax collection is basically unfair, you and your peers are being treated differently, would that undermine legitimacy? I would say definitely yes. You don't need legal mechanisms to achieve that sense of fairness. So I was communicating with Professor Susan Morse about this. She wrote a review of the book, and she said, what if every taxpayer know that how much tax they have to pay if they're restaurant owners doesn't depend on the law, depends on the area of the restaurant and how many seats there are in it. That's sort of the rule according to which local tax collectors collect a tax. And so you can have these presumptive tax rules that are, sort of common knowledge locally. And so you can have a sense that among people who are likely to be your peers, you're subject to the same kind of tax treatment. I think that's not going to, we wouldn't regard this as representing the kind of generality that legal rules have. It's simply a different non-legal standard that is applicable to a small set of taxpayers in particular circumstances. In those circumstances, taxpayers would regard that method of collection as fair, but it's not what Fuller is saying when say we have generally applicable rules. And when you say that U.S. taxpayers feel that bargaining is unfair, that's all relative to legal norms. How can you mean the expression of unfairness? You mean that I'm not supposed to read the rules and report truthfully on the tax return? Instead, I should be bargaining with you that I'm doing the wrong thing. That kind of sense of unfairness is all against a background of compliance with legal norms.
Okay, thank you. So we have a number of questions that have flowed into the queue. So let me turn to those. So from Titsong Lao, congratulations to Wei for the book, which offers an interesting and significant perspective to understand China. Question regarding negotiations. Does the book make a difference between SOEs, foreign investment enterprises, and domestic enterprises? My observation is that there is not much negotiation for FIEs, more rule of law like you suggested that. There is some negotiation for SOEs, less rule of law, less negotiations for domestic private enterprises than SOEs, but more than FIEs. So is there a spectrum of how much negotiation for foreign enterprises, state-owned enterprises, and domestic private enterprises?
Yeah, that's an interesting question. Let me just tell one story from the book. In 2008, I was practicing in Beijing, and my friends who were tax practitioners representing multinationals said, this is really strange. We're being asked to self-inspect. All large businesses are asked to self-inspect and report how much tax that you should be paying. We've never done this before, and this is basically the same as bargaining. I don't know why we're doing that, okay? And so that's most of us working for foreign investment enterprises, for large companies, first came to know about self-inspection. What I describe in the book is that this was actually done on a massive scale for Chinese taxpayers since the late 1990s. And so you can see a lot of documents guiding the practice of self-inspections. they came to the attention of the lead tax practitioners only when they're applied to large and foreign enterprises. And so that example shows that, yes, bargaining is different, what kind of businesses you are. If you're in the very small minority of firms that are, 2% of Chinese firms are foreign invested, let's say, Chinese state-owned enterprises also small. There's less bargaining probably for FIEs. There's bargaining for SOEs. The bargaining is, between government actors, right? And so it's a different kind of bargaining from private enterprises. I could distinguish them. The overall picture is that there's a lot of bargaining, and the overwhelming source of revenue is from private enterprises.
Great. Okay, question from Sam Sim. Hi, Sam. It's nice to see your name in the chat. Thank you for a fascinating presentation, Professor Cui. How will the unique characteristics of the Chinese system influence how China adopts or will apply BEPS? Small question. Maybe we should. Why don't you? Do you want to say what BEPS is for non-tax audience members?
Yeah, so that's a question about international taxation, and so a lot of practitioners around the world, for people who, I don't know how many members of the audience are not non-tax people, maybe it's majority tax people, tax lawyers many of us are international in orientation because of global transactions, and so comparative tax law, international tax law is something that people are motivated to engage in early on, and I benefited from that feature of the profession. Right now, but people are mostly interested in how countries like China will act in the sphere of international taxation. And I think that's a separate topic, and we have to adopt a completely different set of tools to analyze transactions. So how does it matter when we think about the large degree of non-law-based enforcement in China to thinking about international tax policy? I think the relevance may be fairly small. Even among large taxpayers, can you envision bargaining, secret deals, secret policies? Absolutely. That happens in a lot of countries. It doesn't really affect it really doesn't depend on how, on average, how your system is treated. And so let's say, India has very few tax administrators, not a lot of taxpayer service, a lot of tax litigation. So I think that the feature of rule of law in tax administration in India will be very different from China. But if you talk about whether Indian major companies, if they have the same kind of relationship with the Indian government as Chinese companies to Chinese government, I would say that there's more similarities probably. Yeah, so those are two separate issues. Unfortunately, Sam, we're not going to be able to say much about international taxation through this book.
Okay, next, there's just an informational question in the queue asking, I think, either whether you've written one or whether you have a citation that would be a good article, a comparative article about tax collection in China and the US. I'd be kind of surprised if that exists, but you would know.
Yeah. So in the book, I don't talk a lot about the US, but I think that information is fairly easy to get, and so I'm not sure that we need like a article specialized, because we don't really know what issue that will be addressing. Yeah, so if I say U.S. tax administration is based on the rule of law, the IRS is not well liked by American taxpayers because they provide pretty bad taxpayer services, they have bad technology, and so on. That sort of captures a portion, but I'm not sure, to which audience, what questions that answers.
Okay, so follow-up question from Titsong Liao. Wei, another observation, the micro foundations of the rule of law has to do with the difference between constitutive laws and regulative laws. Chinese laws tend to be more sophisticated in regulative rules, but less so in constitutive rules.
So I wonder if Tijong can elaborate that dichotomy. Do
So
you
if you
know
want
what
to
it is?
type into the chat elaboration, so I guess the challenge would be is there a space in Chinese law where we are more likely to see micro foundations? So I guess this goes to your final slide and question about applicability to different substantive areas. I'm not sure
Yeah,
if the reference to regulative rules, who the regulated actors are. In part of that,
yeah, yeah,
kind of
yeah.
what I was
So
asking.
yeah. So Tijong, let me give one try. Let's say, in the US and Canada, we think of tax law as extremely complicated. Okay. And so that is really possible only because these countries have very, very sophisticated rule of law systems. And you trust taxpayers and their advisors to pay attention to these complicated rules very carefully and apply most of them. Okay. And so that's an area where the complexity of tax rules is completely a function of whether there is a self-assessment system or not. And so what China gives up is the tax revenue managers can only monitor so few things. There's no chance that they can implement this wide set of rules. And if taxpayers know that all that matters is what the revenue manager knows, not what the law says, those rules are not going to be implemented. That's sort of repeating what I said earlier, but I'm not sure what the distinction Tijong proposes was getting at.
All right, the next question in the queue. Congratulations on your book, Professor Shui. My question pertains to the concept of self-assessment tax, which I first encountered in Sun Yat-sen's policy and subsequently learned about through Professor Eric Posner's book, Radical Markets. I'm interested in your perspective on whether self-assessment tax represents a compromise resulting from the tax authority's lack of information, or whether it could be a promising approach to taxation.
So I know radical markets. I'm trying to think about. So I don't think anything in radical markets is related to the idea of self-assessment here. So I think, are you talking about the practice of bidding for property? So putting a value on property. And so, for example, if let's say, if I value as something at too low, someone else is going to bid and take the property away from me. So I have incentives to report truthfully what my real valuation of the property is, so that I can keep the property, but I have to pay tax on that. I think that auction mechanism is maybe what you're getting at. Maybe Sun Yat-sen said something about it. Here we're talking about simply learning legal rules and following legal rules. And the tax manifestation of that is people doing self-assessment in the sense of, filing tax returns. On each line of the tax return, you have to look at a rule that says, what do I enter on this line? And if you look at a corporate income tax return or even the personal income tax return, that's a lot of rules to go through, right? So that's a very complicated compliance exercise.
Yeah, I mean, perhaps I wonder if part of what the question is getting at is asking about compromise, and you've stopped short of well, you did say you have a preference for rule of law, having been a long-time resident in North America, but I mean, it is to be expected that in a system, any type of system like tax law, and of course many other areas of law as well that are complex, that professional administrators will have some advantage in knowledge of the law vis-a-vis like non-sophisticated individual taxpayers, putting aside a third-party advisor, a professional bar or something. The regulated parties should have superior information about the facts of their own case. Even an actor that has no interest in avoidance or hiding anything, right? A good faith actor will have more information and understanding of their own business. And so the two stories here, the Chinese initial self-assessment story in the 90s would maybe work better to the extent the concern is getting information that is disproportionately held by the regulated party, the taxpayer.
Yeah.
And the later story would say, okay, like especially lacking the micro foundations of general knowledge, we do better to have the collector.
Yeah.
Right.
Yeah. So whether private information should matter to outcomes is a policy decision. So it's not like independently given. And so the more we have the rule of law, the more we can rely on private information. The more we rely on government available information, we can afford to move away from the rule of law. So the book says, imagine that a country can collect all the tax revenue needs from property taxes. There's no self-assessment in property taxes. The government knows as well as you do what your property is worth. Okay, in that case, let's get rid of return filing. We can just have a system. That's a system you can have without the rule of law, just the government telling you how much you have to pay. That's an instance where private information is not needed. Public enforcement is completely adequate.
Yeah, so I might push back a little bit on valuation and public availability, but that probably gets us into the weeds of tax valuation. So let me ask another question, and please, audience members, keep questions coming in the queue because I have a long list on my own sheet, but I'm sure Professor Sui wants to hear from audience members as well. I was thinking about your graph early on in your slides with the regression line, the scatter plot of what countries are collecting, and it's always dangerous to eyeball these things and draw conclusions. But if I do that, do the thing I'm not supposed to do, it does seem like the dispersion increases as countries get wealthier. And so that means there's a really interesting story to be told if you're interested in tax and development broadly, tax as understood in the West or tax as understood elsewhere, is that at certain stages, early stages of economic development, and this is of course well understood, the hard constraint is what the system can collect, and most governments would like to collect more. So if we just measure it in simple tax to GDP ratio, they'd say, yeah, we'd like to collect more. This is all we can collect. We've tried every tax handle, and we can't get above 16% tax GDP. And then you get right to the richest countries in the world, and there's quite a huge dispersion.
Yes,
in that graph.
absolutely.
And what that reflects is different political views about the best size of the public sector across countries. So, the US voluntarily collects much more tax than it might or it could. Its binding constraint is not what we can collect. It's what we sort of choose to collect as an output of a political process. Peer countries with similar levels of economic development and wealth collect a lot more in a tax to GDP ratio. And so if that's right, if we do see that dispersion, so at some point the size of the public sector becomes more of a voluntary political question, earlier stages of economic development, there's more of a binding constraint. Do you think that's relevant to the story you tell? Or I guess I should say, where, if that's right, where do you think China is in that picture? And what does that tell us about how law? Because I would tend to think of law as one of the main ways we would ultimately try to mediate that voluntary choice of not just who pays, but how much are we going to pay in the aggregate and move to the public sector?
So Mitchell, let me just say, I think we have 10 minutes left. All of the questions that we've been talking about are extremely sophisticated. That probably makes sense only to tax specialists. And so I want to answer your question, but I want to have 5 minutes to say something up to non-tax specialists. And the good thing that this session is recorded, so whatever I say, even if it's not heard now, may be heard later. But to answer your question, I think that graph is my interpretation of the low tax countries would be rich countries that have resources that don't need to have taxation. Saudi Arabia is up there. So there are countries like that. So the right way of doing it is to have a regression that controls for economic size, for example. And so once you have that, is there a very large dispersion in tax, preferences for taxation? I think that's my prior is that dispersion is much smaller. Whether someone has done that, I have to look, right? So Hong Kong is there and Singapore is up there. And then you say, is that because of their preferences, or is that because they have major sources of other revenue, like the entire land mass of Hong Kong, right? So that's the, I'm happy to talk about that further, but that's a preliminary answer. I think the one thing that I want to say, at the beginning, I want to say it's really important for people to learn about tax in China. I want to put out one example. And it will be amazing. It will be quite telling if most of the people who are here, who are tax folks, have never really heard about this story, which is the so-called Common Prosperity campaign that Xi Jinping started in 2021. And I don't know how many of you have heard of it, but that's what the Western press has been talking about for the last 2 years. And so I just want to say that, if we're tax professionals, when we think about what describes a country's redistribution program, it has to be the tax and transfer system, right? It's a matter of how high a tax burden is imposed on the well-off and how much distribution we're making to the neediest people. And what's amazing is if you look at, the common prosperity discourse, very few people look at how tax is collected in China and how much is being distributed to the poor people. In fact, under Xi Jinping, taxes have been seriously cut, and there's no increase of means-tested distribution. So he shouldn't get credit for any kind of redistribution. Remember the evidence for common prosperity was that the government cracked down on tech, and then, there's slowing down of subsidized loans to big real estate developers. So I think that's like, saying Donald Trump wanted to negotiate it for lower drug prices with pharmaceuticals, and therefore Donald Trump must be a common prosperity president, right? No, that's wrong. And so there is this whole discussion about how much redistribution is going on in China that is completely unanchored with Chinese fiscal realities. And so I'm actually writing about something now, but I wanted to mention here that really, do we care about redistribution in China? There are two possibilities. One is that we do care. If we do care, we can't not learn about tax, and you can't just wing it, right? You can't just say, our friends think that we have high tax. The other alternative is that we really don't care about redistribution in China. And that to me is troubling, is what I've been thinking about since finishing this book.
Probably have time for one more question from the audience, if anyone has one. If not, that is a nice segue into something we were talking about earlier this week, which maybe you want to comment on it as well, because I think is of interest to a general audience, which is just the way we think about the connection between redistribution and net savings in China. So from the Western standpoint, we think a lot about what China owns in terms of debt issued by other sovereigns. So the China sits on a vast amount of resources that it could use for redistributive purposes now. And the story, the intertemporal story is, okay, it's savings, so maybe it's redistributive in the future, or maybe not. But do you want to comment on that? It's because I think whether you're grounded as a tax person or not, or Western tax person or not, these are striking aspects of the fiscal system as we would kind of think about what a tax system is doing.
Yeah. So Mitchell, you may have to remind me of your formulation. I think you said that, the idea that China has so much saving, instead of using that for redistribution, we're saving for the future. That seems to be distributing to future generations that are going to be better off. And
Exactly.
that's a weird redistributional consequence. And I should think about that question more. My assumption about Chinese savings is that all serves as a kind of insurance.
Mhm.
And so that is really not for the sake of redistribution.
Right.
Um,
Is that,
and
but does that become a source of, I mean, is that a source of or something people would question, in the sense that, so the inverse in the United States would be, we're so debt ridden, we burden future generations. And then the response might be, no, we'll grow our way out of it as we always have. And then the
yeah,
response is, no, you won't. You've
yeah,
peaked on growth. And
yeah,
so presumably that invites the inverse discourse in China. It's like,
yeah,
why are we saving so much? But maybe
yeah.
it's just not something that is questioned.
Yeah. So again, so Michelle, you're raising a question that's really interesting, really intriguing from a tax policy perspective. We can
Yeah.
have all kinds of, I mean, there's wonderful scholarship out there. For example, thinking about the Chinese pension system, should we continue with a pay-as-you-go system, or should we have that's really just for savings and you keep individual accounts? And a major scholarly argument for pay-as-you-go system is to say the future generations will be better off. We're best off, spending money, borrowing money from the future and spending on people in the current generation. And so that is also going on in China. It's a really important of Chinese tax policy, and it's a controversial aspect. So if one studied Chinese taxation, all those things became alive. But I wish I had more interlocutors talking about this.
Well, you've certainly set the stage for that. So I do think we've come to our time. So I want to thank Professor Cui for his book, for his presentation, and for a very rich conversation. It is a little hard for us to know who our entire audience is. So I hope our audience has found it enlightening. And if you're not a tax specialist, I hope we didn't scare you off. I think Professor Cui's invitation is, please come think about this, come read this. Even if you're not a tax person, there's a lot to learn from it. So you'll see that there's a link in the chat for the webinar to the book. So please click on that and consider acquiring it and reading it. Lastly, let me extend my thanks again to the U.S. Asia Law Institute for hosting this event, and thanks for inviting me to moderate. It's been a lot of fun, and look
Thank you,
forward to
Mitchell.
continuing the conversation.
Yeah, thank you. That was really fun from my end as well. I want to thank Catherine and other colleagues at NYU in providing this opportunity. Thank you so much.